Imagine a company looking you dead in the eye and telling you they're going to physically build a microscopic 500-story skyscraper. And not just build it, but drill a perfectly straight elevator shaft right down the middle of it.
Right, at the atomic level.
Exactly, at the atomic level, without nicking the walls on any of the floors.
Yep.
Oh, and they're going to generate a 52% gross profit margin while doing it.
I mean, it sounds like complete science fiction, but that is the literal physical reality of what is happening in the semiconductor equipment space right now.
Which is exactly why we're here. So welcome to a special Talk Tickers edition of the Deep Dive. Usually, our Talk Tickers format is built for speed.
Yeah, get in, get out.
Right. The mission is to break down corporate earnings for retail investors fast, data forward, opinionated, and actionable. We usually aim to get you in and out in under 5 minutes.
Yeah.
But today, we're looking at the Q4 2026 earnings call for Lam Research Corporation, ticker symbol L-RCX.
Yeah.
And, well, we have a problem.
A very good problem to have, honestly, if you're an investor, but yeah, definitely a problem for our usual clock.
Exactly. Because when people talk about the artificial intelligence boom, they usually talk about it like it's, I don't know, ethereal.
Yeah, floating in the ether.
Right. We talk about the cloud, algorithms, large language models updating themselves in the background. It feels weightless. But Lam Research is the company building the intensely physical, heavy-duty metal that makes that weightless AI actually possible. And they just dropped an earnings report so incredibly dense and so critical to the entire global AI supply chain that 5 minutes is just not going to cut it.
No, not even close.
So we're throwing out the clock today.
I think it's entirely justified, honestly. Look, you cannot understand where the AI revolution is heading financially unless you understand the physical constraints of the hardware. And Lam is the one solving those constraints.
So we're going to take the time to cut through the Wall Street jargon. We're going to hit the numbers that matter, explain the underlying physics driving those numbers, and give you a clear, definitive take on whether this stock is a buy, a hold, or a fold.
Let's do it.
Okay, let's unpack this. We have to start with the headline numbers. Because as a retail investor, this is what you want to see at the top of the page.
Oh, absolutely. The June 2026 quarter was, it was a masterclass in operational leverage. The top and bottom line beats were just staggering.
I'm just going to fire these off so we have the baseline.
Go for it.
Revenue for the quarter, $6.72 billion. That is up 15% sequentially from the prior quarter and up 30% year over year.
Huge.
Right. And they comfortably beat the midpoint of their own guidance. Earnings per share, or EPS, came in at a record $1.82 for the quarter.
Wow.
But here's the number that made me stop reading and literally do a double take. Gross margin, 52%.
It's unbelievable.
It exceeded the high end of their guidance and hit the highest quarterly gross margin they have seen in 20 years. Plus, operating margin came in at 38.4%, which is also an all-time record.
Right. And what's fascinating here, and what retail investors really need to internalize, is how absurd a 52% gross margin is for this specific type of business.
Explain that, because it sounds high, but context is everything.
Well, I mean, this isn't a software as a service company. A software company writes code once and duplicates it for millions of users with basically zero marginal cost.
Right.
That's how they get 70 or 80% margins. But Lam Research does not write software. They build literal tons of highly complex metal, massive vacuum chambers, intricate plasma delivery systems, robotics.
Yeah, they're putting heavy machinery on cargo planes.
Yeah.
So what does this all mean? How does a heavy manufacturing company achieve software-like margins? Because my read on this is that, you don't hit a 20-year high in profitability just by selling more volume. You have to be squeezing more profit out of every single unit.
You are spot on. It comes down to a triad of factors that their CFO, Doug Bettinger, laid out on the call. First is pricing power.
Okay.
Lam's tools are mission-critical bottlenecks for their customers. I mean, if you are building a $20 billion semiconductor fab, you cannot finish it without Lam-specific etching tools. That gives Lam immense pricing leverage.
They literally hold the keys.
Exactly. Second is a highly favorable product mix. They are selling their most advanced, absolute bleeding-edge equipment right now because that's exactly what the AI boom demands.
And those premium tools carry premium margins, naturally.
Yeah.
And the third factor, because I'm guessing the cost side of the equation plays a massive role here too.
Exactly, yeah. The third is operational and scale efficiencies. And this ties directly into how they've structured their global manufacturing footprint.
I'm glad you brought that up because during the Q&A section of the call, an analyst from JP Morgan, Harlan Sur, zeroed in on exactly this.
He did, yeah.
He pointed out that Lam's margins seemed to take a structural permanent step up back in 2023 when they started moving more manufacturing volume through their lower cost facility in Malaysia.
Yes, and CEO Tim Archer expanded on that beautifully by introducing this concept of operational velocity. It's a great term.
Operational velocity.
Right. Lam isn't just relying on one massive mega factory. They have a distributed, highly strategic global footprint with sites in Oregon, California, Ohio, Malaysia, Taiwan, Korea, and Austria.
But wait, isn't a distributed footprint harder to manage? Like, why does that give them better margins?
Because it creates supply chain decoupling. These sites aren't all drawing from the exact same local suppliers or facing the same local labor shortages or port bottlenecks.
Oh, I see.
Yeah, so if a specific valve or component is facing a shortage in North America, they have the agility to source and build through their Asian or European footprint.
That's incredibly smart.
It gives Lam the ability to get the components they need when they need them to fulfill urgent, high-margin customer orders, and they do it without having to pay extortionate last-minute expediting fees that would, normally destroy their cost structure.
That makes total sense. So it's not just that they have a cheaper factory in Malaysia, it's that they are masters of logistics, moving production dynamically to protect their profit margins.
Exactly.
But let's be real, numbers this big, a 30% year-over-year revenue jump, that doesn't just happen because you optimized a supply chain and routed around a bottleneck.
Yeah, definitely not.
You need a massive catalyst in the end market. Someone has to be knocking down your door to buy these machines. And that brings us to the story behind the data, which is the AI hardware boom.
This is where we have to connect the financials directly to the physics.
Right.
If you don't understand the physical transition happening inside these chips, you just cannot understand why Lam is generating $6.7 billion in a single quarter.
Okay, let's use an analogy to ground this. When we talk about AI hardware, everyone immediately thinks of NVIDIA and GPUs, the processors.
Sure.
If the AI processor is the brain of the operation, doing all the complex thinking and calculating, then memory is the filing cabinet.
I like that. It's a symbiotic relationship.
Right, because you can have a genius level brain. You can have the fastest, most advanced GPU in the world. But if that genius has to constantly stop thinking, walk over to a tiny, disorganized, slow filing cabinet to pull out the files it needs to do its job, the whole system grinds to a halt.
It creates a massive bottleneck.
Exactly. You cannot pair a genius brain with a slow cabinet.
And that analogy perfectly sets up the wildest, most eye-popping statistic from this entire earnings transcript. Revenue NAND being flash storage memory, the filing cabinet we're talking about, more than doubled sequentially from the prior quarter.
Wait, it doubled?
It doubled in 3 months.
A 100% quarter-over-quarter jump. That is insane for hardware. I mean, non-volatile memory accounted for 23% of their systems revenue this quarter, up from just 12% the quarter before.
Yeah.
So my question is why? What is happening in the filing cabinet industry that requires memory manufacturers to suddenly buy twice as much heavy equipment from Lam Research in a 90-day window?
Well, if we connect this to the bigger picture of how AI is evolving, we're moving rapidly beyond just simple text-based chatbots.
Right, ChatGPT was just the beginning.
Exactly. Tim Archer laid out the progression on the call. He said AI is moving from initial training to inference to agentic AI, where it acts on its own, and now increasingly towards physical AI, like robotics and autonomous systems.
Okay.
And each one of those waves requires exponentially larger context windows.
And just so we're all on the same page, a context window is basically the AI's active working memory. Early AI could maybe remember a few paragraphs of a conversation before it basically forgot what you're talking about.
Yeah, it was super limited.
But now, tech companies are pushing models that can ingest entire textbooks, thousands of pages of proprietary corporate code, or hours of high-definition video all at once in a single prompt.
Precisely. To support those massive context windows and to ensure that AI has persistent memory so it doesn't have to relearn data every time it boots up, the physical storage hardware has to fundamentally change.
It has to get way bigger.
Yeah. You need massive enterprise solid-state drives, or SSDs for data centers. And to build those, the industry is currently laser-focused on converting their existing manufacturing base to produce 256-layer and above-class memory devices.
Okay, let's pause and visualize this, because this is where Lam's technological moat really shines. When you say 256-layer, they are literally stacking memory cells vertically, like building a skyscraper, to fit more storage into the exact same physical footprint on the chip.
Yes, that's exactly it. For a long time, the industry was building suburban, sprawling memory cells flat next to each other.
But they ran out of land.
They ran out of real estate on the silicon. So they started building vertically. They went from 64 layers to 128 layers, and now they're racing past 256 layers, heading toward 500 plus layers.
But as those layer counts rise, my understanding is that the manufacturing difficulty doesn't just increase linearly. Like, it's not just, hey, let's build the same thing, but taller.
No, it increases exponentially. Exponentially is the exact right word. And as that complexity grows, Lam Research's financial opportunity grows with it. To put a hard number on it, management stated they expect Lam's served available market, or SAM, to literally double as the industry moves from the older 128-layer node up to the future 500-plus layer devices.
Double the addressable market just for NAND memory.
Just for NAND.
And this goes back to our skyscraper analogy.
Yeah.
Because etching a hole down through 500 microscopic layers of alternating materials is infinitely harder than etching through 128 layers.
Oh, absolutely.
It's like trying to drill a perfectly straight elevator shaft from the roof of the Empire State Building all the way down to the basement, using a drill bit made of superheated plasma, and you cannot deviate by even a fraction of a millimeter, or you ruin the walls on floor 312.
That is a phenomenal way to describe it. In the semiconductor world, this is called high aspect ratio etching, and it is arguably the hardest physical engineering challenge on Earth right now.
So how does Lam actually do it? Because if they're defending a 52% gross margin, they must have some proprietary way of drilling that hole that their competitors simply cannot replicate.
They absolutely do. Let's break down some of the specific tools Lam mentioned on the call. They highlighted the ACARA conductor etch platform. They noted they have an installed base of more than 40,000 of these chambers worldwide, which is a staggering footprint.
So what makes the ACARA platform the tool of choice for drilling these microscopic elevator shafts?
It comes down to physics. When you are shooting plasma ions down a 500-layer trench, those ions act like a laser beam being fired down a long, narrow hallway lined with mirrors.
Okay, I'm picturing it.
The deeper the trench goes, the more those ions want to bounce off the walls. If they hit the side walls, they start eating away at the material, and the perfectly straight cylinder suddenly bows out and becomes barrel-shaped.
And if it bows out, it shorts out the memory cells next to it, and the whole chip is garbage.
Exactly. It ruins the yield. To prevent this, Lam's ACARA system uses a unique direct drive plasma technology. They use incredibly precise magnetic fields and pulsed electrical frequencies to confine the plasma ions, forcing them to travel perfectly vertically deep into the trench without striking the sidewalls.
Wow. So they're magnetically steering the plasma drill bit at the atomic level.
Yes. And what is so compelling from an investment perspective is how this technology migrates.
What do you mean?
Well, ACARA was first adopted for cutting-edge 2-nanometer logic chips. But what's happening now is that the DRAM memory makers, the fast temporary working memory for chips, they're hitting their own physical limits.
Right.
Their feature sizes are shrinking so much that they're starting to face the exact same high aspect ratio patterning challenges that the logic guys faced a few years ago.
Oh, which means Lam doesn't have to invent a completely new tool. They can just sell the ACARA system to a whole new set of customers.
Precisely.
Okay.
ACARA is now migrating over and gaining massive momentum in advanced DRAM. The installed base for ACARA has doubled every single year since it launched.
But it isn't just about etching the hole, right? Once you drill the elevator shaft, you have to reinforce the walls and fill it with conductive material. They mentioned DRAM customers adopting their vector hard mask deposition platform for low-K film patterning.
Yes.
And they specifically noted this gives customers a 20% cost savings compared to traditional approaches.
Because in semiconductor manufacturing, yield is everything. If you throw away 30% of the chips you make because of defects, your profitability is destroyed. If Lam can co-optimize the hard mask film, which is the protective layer they deposit on the chip, with their own ACOC or conductor etch process, they deliver better transistor performance and significantly higher yield. It's an end-to-end solution that locks the customer into the Lam ecosystem.
You mentioned low K film. Let's translate that for the listener because it's a huge competitive advantage.
Sure.
My understanding of capacitance in this context is like trying to push water through a leaky, uninsulated pipe. You want the electrical signal to go from point A to point B inside the chip as fast as possible.
Right.
But if the wires are packed too tightly together without good insulation, the electrical signal leaks across the gap, creating crosstalk. It slows the chip down and wastes massive amounts of power as heat.
That's exactly right. The K refers to the dielectric constant of the insulating material. A low K film is essentially a highly advanced atomic-level insulation tape wrapped around the microscopic copper wires to stop that electrical leaking.
That makes sense.
Lam's vector diffusion barrier systems provide hermetic protection and actually reduce that unwanted capacitance by about 5% compared to competing technologies.
Now, to a layman, 5% might not sound like a lot. But if you are running a massive AI data center with 100,000 GPUs running 24/7, a 5% improvement in electrical efficiency at the atomic level translates to millions of dollars in power savings and massive performance gains at the macro level. No wonder customers are willing to pay Lam's premium prices.
It literally pays for itself. And another critical tool they highlighted is the Argos selective etch system, which is vital for the transition in transistor architecture.
Let's unpack this transistor transition, because he talked about moving from FinFET structures to gate all-around structures.
Yeah, this is a big deal.
I've always thought of a transistor as a tiny gate controlling the flow of water. When the gate is open, water or electrons flows, representing a 1. When it's closed, it stops, representing a 0.
That's the foundational concept of digital logic, yes.
So FinFET was like building a 3D wall to stop the water. It wrapped the gate around 3 sides of the channel. But as chips got microscopically small, that 3-sided dam started leaking. The electrons were sneaking through the bottom.
Exactly, they were bleeding through.
So the industry is moving to gate all around, where they run the silicon channel like a microscopic wire, and they wrap the gate a full 360 degrees around it. Total control. Nothing leaks.
But here is the manufacturing nightmare that creates. When you move to gate all around, you suddenly have complex, delicate nanoribbons of silicon suspended in space.
Oh, wow.
The surface area that needs meticulous cleaning and treatment roughly doubles compared to FinFET. And you have to clean underneath and between these suspended wires without snapping them. If you blast them with heavy plasma ions, you'll just shatter the transistor.
Enter the Argos system.
Exactly. Argos creates what Lam calls a radical-rich environment.
Radical-rich.
Yeah. Instead of bombarding the delicate structures with heavy charged ions, it uses chemical radicals, which are highly reactive but uncharged atoms, to gently and selectively strip away impurities chemically with minimal physical damage to the substrate.
That's brilliant.
And just like ACARA, Argos is winning aggressively at the 2-nanometer logic level and is now expanding into DRAM. The technical synergy across their product lines is just remarkable.
Okay, so we've established that the memory side is exploding, and Lam's highly specialized plasma and chemical tools are migrating across different types of chips, defending that 52% margin.
Yes.
Let's pivot slightly and look at the geographic data, because so far we've talked about printing $6.7 billion in revenue, but who is actually handing over billions of dollars in this economic environment? Where are these massive machines physically going?
Geographic revenue always tells a compelling story about global macroeconomic trends and, frankly, the physical footprint of the PEC war. Taiwan was their biggest market this quarter, hitting a record 27% of revenue, up from 23% in March.
That makes intuitive sense. Taiwan's growth is heavily driven by advanced logic and foundry needs. When we talk about 2-nanometer and 3-nanometer capability and the advanced packaging required for NVIDIA's AI chips, Taiwan, specifically companies like TSMC, is ground zero.
Absolutely.
So it makes perfect sense that Taiwan represents a record dollar level for Lam right now.
It does. But the geography that always requires the most nuance is China. China dropped to 26% of revenue, down from 34% the previous quarter.
Now, Doug Bettinger, the CFO, stated clearly on the call that this decline was expected. But here's where it gets really interesting. When a retail investor reads a headline that says, Lam Research China revenue drops from 34% to 26%, the immediate reaction is panic.
Right, they think the sky is falling.
They assume geopolitical export controls have finally choked off the market, or that the Chinese domestic economy is collapsing and demand has evaporated. But Bettinger noted a massive divergence within that single China number.
That is a crucial nuance for investors to grasp. He pointed out that revenue from domestic Chinese customers declined, but revenue from the global multinational customers operating fabs inside China actually grew sequentially.
So how do we interpret that?
It tells us two things. First, Lam expects China's overall wafer fab equipment, or WFE, spending to remain resilient flat to slightly up for the year.
Okay.
The spending on mature nodes, the older, larger chips used in automotive or consumer electronics, which is mostly driven by domestic Chinese companies, that took a breather this quarter after a long period of heavy investment.
That makes sense.
But the global giants, think of the massive Korean or Taiwanese memory companies that have legacy factories physically located on mainland China. They're still heavily investing in and upgrading those specific facilities.
Which means Lam's revenue stream in China is more diversified than just relying on domestic state-backed tech champions.
Exactly.
And rounding out the top three was Korea at 20% of revenue, which is a slight dip from 23% last quarter, but still a massive absolute number, driven heavily by their dominance in the memory market, those filing cabinets we talked about earlier.
Precisely.
So we've covered the machines, the incredible physics required to build them, and where they are shipping globally. But there's a whole other side to Lam's business that rarely makes the mainstream headlines, but is quietly acting as a massive, high-margin cash printing machine. I'm talking about the Customer Support Business Group, or CSBG.
The services cash cow. It is, from a financial perspective, an incredibly beautiful business model.
I was blown away by this number. CSBG generated a record $2.5 billion in the June quarter.
Record setting.
That is up 17% sequentially and 43% higher than the same period last year. $2.5 billion in a single quarter just from supporting the tools they've already sold.
It is the ultimate razor and blades business model, but executed on an industrial multi-billion-dollar scale. Once a Lam tool is installed in a fab, it becomes a permanent annuity stream for the company.
So what drove that massive 17% sequential spike in services? Customers aren't just suddenly breaking their machines more often.
No. Doug Bettinger pointed primarily to record upgrade revenue. Remember that $40 billion total addressable market for NAND upgrades the industry has been talking about for the last year?
Yeah.
We are finally seeing that play out in real time on the balance sheet. Customers aren't just buying brand new tools, they are paying Lam massive sums to retrofit and upgrade their existing older tools out in the field so they can handle these new 200-plus layer architectures.
So they swap out a chamber or upgrade the plasma delivery system on an old machine to make it capable of advanced etching.
Exactly.
That's incredibly capital efficient for the customer and highly profitable for Lam. And I imagine it's not just upgrades, right? Spare parts must be a massive driver.
Huge. When the semiconductor industry is running at maximum capacity to meet ferocious AI demand, these machines are running 24 hours a day, 7 days a week. They are utilizing superheated plasma and highly corrosive chemicals. Parts wear out.
Right.
They need consumables. They need specialized replacement valves and chambers. But beyond the parts, my absolute favorite element of the CSBG story, and maybe the most sci-fi element of this whole earnings call, is their deployment of Dextro Cobots.
The collaborative maintenance robots. Yes, this is a brilliant operational development.
It really is. Think about this from the perspective of a semiconductor fab manager. You are running a multi-billion-dollar clean room facility. If a single critical Lam etching machine goes down for unexpected maintenance, the entire production line backs up.
It's a nightmare.
You are bleeding millions of dollars in depreciated value by the hour.
And humans make mistakes. If a human technician drops a microscopic screw or applies slightly too much torque to a fitting inside a vacuum chamber, that tool might fail again an hour later.
Exactly. So Lam has introduced these Dextro Cobots robotic arms that work directly alongside human technicians in the clean room.
That is so cool.
Tim Archer said they offer precision and repeatability for automated maintenance, which leads directly to improved first-time right recovery.
Meaning, when the machine is fixed, it stays fixed.
It stays fixed. It dramatically increases total tool availability. And since the start of 2026, Lam has doubled the number of preventative maintenance tasks these robots are certified to handle.
Wow. In an environment of industry-wide supply shortages, maximizing the output of your existing tools is paramount.
Absolutely.
If a cobot can shave 2 hours off a complex maintenance cycle or prevent a human error that would require a second maintenance run, that directly translates to more chips out the door and more revenue for the fab. And importantly, Lam noted that these equipment intelligence solutions, which were initially proven out in NAND memory fabs, are now expanding into DRAM fabs, creating a whole new vector for service revenue in the second half of the year.
It creates a sticky ecosystem. The fab manager becomes reliant on Lam's robotic maintenance to hit their own production quotas.
Okay, I have to push back here for a second on behalf of the retail investor listening who's trying to decide if this stock is a buy right now.
Sure, hit me.
We are hearing about a 100% sequential jump in NAND equipment revenue, 43% year-over-year growth in services, people paying for every spare part and upgrade they can find. If I'm holding this stock, my concern is this just a temporary spike?
The cycle question.
Right. Are customers panic buying equipment and hoarding spare parts because they are terrified of AI supply chain bottlenecks? Are we pulling forward demand from 2027 into 2026, setting us up for a massive cyclical crash? Or is this a sustainable, multi-year structural trend?
It is the most important question to ask, and it's the exact question institutional investors were probing during the call. The answer lies in the macro wafer fab equipment, or WFE outlook. Management officially upgraded their view for calendar year 2026 WFE spending to the low $150 billion range globally. That is up from their prior outlook of $140 billion just a few months ago.
Now, a $10 billion upgrade in incremental industry spending across the globe doesn't happen by accident. And it certainly doesn't happen just from panic buying spare parts.
No, it doesn't. And during the Q&A, Srini Pajjuri from RBC Capital Markets specifically pressed them on this dynamic. He asked a highly perceptive question, basically saying, you've told us for months that the industry is constrained by physical clean room space. People don't have anywhere to put new machines. So how did you suddenly find an extra $10 billion in global demand if there are no new buildings to put the tools in?
I love Tim Archer's answer to this. It was remarkably candid for a CEO. He basically shrugged and said, well, people find ways.
Exactly. When the demand for AI chips is this ferocious and the profit margins for selling those chips are this high, semiconductor manufacturers get highly creative.
They squeeze it in.
They squeeze out a little bit of extra space in existing facilities. They look at their production line, identify the one specific bottleneck tool that is holding up the entire factory, and they buy targeted equipment from Lam to resolve that single bottleneck.
Which unlocks a massive amount of throughput.
Yep. Which then frees up budget to upgrade the next bottleneck. It is a continuous, relentless optimization puzzle.
So what you're saying is the demand is so strong, it's bursting at the seams. The only real ceiling on Lam's revenue right now isn't a lack of customer appetite, it's literal, physical, clean room square footage. They physically cannot build the factories fast enough to house the tools they want to buy.
That is the core dynamic of the semiconductor market right now.
And that perfectly transitions us to the third section of our Talk Techers deep dive, which is management guidance. Knowing the backstory and the physics is great for context, but as an investor, you are buying the future cash flows. You want to know what happens tomorrow? So what are they saying about the future?
The future, according to Lam's official guidance, looks incredibly robust, almost defying gravity for a hardware company of this scale. Let's look at the September 2026 quarter, which is technically their Q1 of fiscal 2027 since their fiscal year ends in June.
Right. So for the September quarter, they are guiding for revenue of $8.1 billion, plus or minus $400 million.
Yep.
I really want to pause and emphasize that number for the listener. They just printed a massive record-breaking beat at $6.7 billion. And they're telling Wall Street that the next quarter is going to jump by another 20% sequentially to $8.1 billion.
It's massive.
That is a staggering sequential leap. I mean, to physically manufacture, crate, ship, and install an additional $1.4 billion worth of heavy vacuum chambers in 90 days requires Herculean logistics.
It does. And the reason investors can trust that massive $8.1 billion guide is because it's supported by a leading indicator sitting right on their balance sheet deferred revenue.
Oh, that's key.
Doug Bettinger noted their deferred revenue balance ended the quarter at $2.43 billion. That is an increase of $213 million from March.
And deferred revenue, just to clarify, is money they have collected but haven't officially recognized as revenue yet because the tool hasn't been fully installed and signed off on by the customer.
Exactly. But the most important part of that metric is what drove the increase. Bettinger stated the largest driver of that increase was customer down payments.
Cash up front.
Customers are literally handing Lam cash in advance, quarters ahead of time, just to secure their spot in the manufacturing queue because they know they absolutely have to have these tools. That cash acts as a massive de-risking mechanism for Lam's forward guidance.
As for the rest of the guidance, gross margin is expected to hold steady at those record highs of 52%, plus or minus 1%. So they are maintaining that incredible pricing power even as volume scales massively. Operating margin guidance is creeping up even higher to 39.5%, and EPS is guided at $2.15.
Solid numbers across the board.
The only slight headwind mentioned on the entire call was the non-GAAP tax rate, which is expected to tick up to the mid-teens in the September quarter.
Yes, and Bettinger explained exactly what is driving that tax bump. It's primarily due to higher revenue shifting into higher tax jurisdictions, specifically the United States, as they enter the new fiscal year. This is combined with a higher U.S. GILTI rate.
Wait, GILTI, what is that?
It stands for Global Intangible Low Taxed Income.
Oh, okay.
It's essentially a standard U.S. corporate tax friction designed to ensure companies pay a minimum level of tax on earnings generated by intangible assets, like intellectual property and patents, even if those earnings are realized by foreign subsidiaries.
Gotcha.
As Lam's global mix shifts and they move intellectual property around to support things like the Malaysian factory expansion, they trigger some of this GILTI friction. It is a completely standard operational tax reality for multinational, but it's important for analysts to model for it so they aren't surprised by the EPS impact.
Got it. So it's an accounting friction, not an operational flaw. However, the more exciting part of the guidance wasn't the next 3 months. It was the update to their long-term margin targets, because this is where the thesis for holding the stock for the next 3 to 5 years is built.
A year and a half ago, at their 2025 Investor Day, Lam laid out a multi-year profitability framework. Now, because AI demand has strengthened so significantly and their proprietary tools are migrating into new markets, they are officially updating those long-term targets upward.
Huge signal.
They intend to drive gross margins to the mid-50% level and operating margins to the mid-40% level over the next several years.
Mid-50s gross margin and mid-40s operating margin.
Yeah.
Again, for a company building physical robots and plasma chambers, that is almost unheard of. How do they actually get there? What is the mechanism for that margin expansion?
It all comes down to expanding their SAM, their served available market. Management stated they expect their SAM to reach the high 30% range of all wafer fab equipment spending globally.
Wow.
Think about what that means, because AI chips are fundamentally changing, requiring deeper etching for 500-layer memory, thicker deposition, and more complex 3D structures like Gate-All-Around Lam's highly specific technological expertise is becoming a larger and larger percentage of the total cost required to build a chip. They are quite literally capturing a larger slice of a rapidly growing pie.
Let's dig into one of the specific areas driving that massive SAM expansion, because we briefly touched on it earlier, but we need to go much deeper on it. Advanced packaging. This is arguably the most critical bottleneck in global AI chip production right now. You can have all the memory and logic you want, but if you can't package it together, it's useless.
It absolutely is the ultimate bottleneck. When we talk about cutting-edge AI chips like NVIDIA's massive GPUs, they aren't just one single monolithic piece of silicon anymore. The industry is hitting the physical limits of how big they can make a single chip.
Why? What is the limit?
It's a combination of yield and the reticle limit. Let's tackle yield first. If you try to print one massive playing card-sized chip, the statistical probability of a microscopic defect landing somewhere on that massive area and ruining the entire chip is very high.
Right, one speck of dust and it's over.
So instead of one giant chip, the industry is moving to chiplets. They manufacture smaller, perfect chips where the yield is much higher, and then they physically stitch them together on a base layer called a substrate right next to towering stacks of high bandwidth memory, or HBM.
And stitching those separate chiplets together requires incredibly precise, advanced packaging. Tim Archer said Lam is on track to deliver greater than 70% year-on-year growth in this specific packaging segment alone.
70%, yeah.
Because they are the unquestioned industry leaders in something called TSV etch and electroplating.
Which is the core technology making chiplets possible.
Right. So my understanding is TSV stands for through silicon via. If you have a stack of chips, you have to connect the top chip to the bottom chip. So you etch a microscopic, perfectly straight hole vertically through the entire stack of silicon. That's the TSV etch.
Exactly.
And then you have to fill that microscopic hole perfectly with copper wire without leaving any air bubbles or voids inside the hole, because an air bubble would cause electrical resistance and overheat the chip.
Yeah.
That filling process is the electroplating. Archer calls this the drill and fill market, and Lam dominates it.
And this transition to chiplets raises a profound question for the future of Moore's Law. Archer noted on the call that moving forward, AI performance gains will increasingly depend less on traditional transistor density scaling, just making transistors smaller, and more on integrating more chiplets, more HBM memory stacks, and greater memory bandwidth within a single massive package.
Yeah.
The physical packages themselves are getting huge. He said future AI packages will exceed 9 times the reticle size.
Okay, you mentioned the reticle limit earlier. Let's break that down. My understanding of the reticle limit is that it's basically the physical limitation of the camera lens inside the multi-million-dollar lithography machines made by companies like ASML.
Yep, the lens frame.
The machine flashes light through a stencil to print the chip's pattern, but you can only expose an area so big before it literally doesn't fit in the frame of the lens.
That is exactly right. Historically, an entire chip design had to fit inside that single frame, that reticle limit. But now, because AI demands so much computing power and memory, they're stitching multiple components together to create a final, assembled package that is 3, 4, or even 9 times larger than today's mainstream designs, blowing way past the physical limitations of the lithography lens.
Which leads to a massive, fundamental paradigm shift in how the entire semiconductor industry manufactures things.
Yeah.
Since the dawn of the industry, silicon wafers have historically always been round. Think of a perfect 300-millimeter circle, like a small pizza. But if you're trying to pack massive square chiplets together to build a package that is 9 times the reticle limit, a round wafer suddenly wastes a ton of space around the curved edges.
Exactly. It's like trying to cut large square brownies out of a round cake pan. You waste all the edge material. Which is why the industry is looking beyond traditional round wafer-based architectures toward larger formats, specifically panel-level packaging.
Panel-level packaging.
Instead of round silicon wafers, they want to build these chiplet packages on massive rectangular glass or organic panels. It is infinitely more efficient for large square chips.
But I imagine transitioning from a 300-millimeter round wafer to a massive rectangular glass panel introduces horrific new engineering challenges.
Horrific is putting it mildly. The entire global supply chain has been optimized for 50 years to handle round things. When you apply chemicals, like photoresist, to a round wafer, you put a drop in the middle and spin the wafer at high speed. Centrifugal force spreads the liquid perfectly evenly across the circle.
I see where this is going. If you try to spin a giant square glass panel,
the corners create aerodynamic turbulence.
Wow.
The liquid pools heavily in the sharp corners and starves the edges. It is a fluid dynamics nightmare. Furthermore, glass has a fundamentally different coefficient of thermal expansion than silicon. When these deposition machines heat up to hundreds of degrees to deposit metal films, the glass panel expands at a different rate than the silicon chiplets sitting on top of it, causing microscopic warping or cracking.
So how is Lam addressing this? Because if they solve the fluid dynamics and thermal expansion of square glass panels, they essentially lock in their monopoly on advanced packaging for the next decade.
And they are already there. Archer announced on the call that Lam has already shipped massive 510 by 515 millimeter panel systems into development programs across multiple geographies.
That's huge.
And this year, they are shipping their first 3N by 310 millimeter panel tool. They have taken the foundational technology from their industry-leading wafer-based Sabre 3D and wet processing platforms and completely re-engineered it to handle the edge effects and thermal mismatch of large rectangular panels.
This puts them at the absolute bleeding edge of the packaging transition, and it perfectly encapsulates why management is so confident in raising their gross margin targets to the mid-50s. If you are the only company on Earth that has figured out how to uniformly electroplate copper onto a 500-millimeter square glass panel without warping it, you can charge whatever you want for that machine.
That is the very essence of SAM expansion. The industry ran into a terrifying new physics problem panel-level packaging, and Lam has already engineered a highly profitable proprietary machine to solve it.
Okay, we have covered an immense amount of ground. We have unpacked the explosive Q4 headline numbers and that incredible 52% margin. We explored the physics of transitioning to 500-layer 3D NAND and the plasma drills required to do it. We analyzed the geographic dynamics of China and Taiwan.
We hit a lot, yeah.
We broke down the cobot-powered $2.5 billion services boom. We look at the massive $8.1 billion forward guidance de-risked by down payments. And we just explored the paradigm shift to panel-level advanced packaging. It is time for the final segment of our Talk Tickers deep dive, which is the bottom line.
All right, let's bring it home.
I need you to take a definitive, opinionated stance for the retail investors listening right now. Look at all this data, all this physics, all this financial guidance. Is this earnings report a bullish or bearish signal for LRCX?
It is an aggressively, undeniably bullish signal. There is really no other logical way to interpret the data presented. Lam Research is fundamentally outperforming the broader wafer fab equipment market, and this will mark their third consecutive year of doing so.
Third year in a row.
They aren't just passively riding a cyclical wave of AI capital expenditure. They are actively, structurally expanding their profit margins while riding that wave, shifting their long-term gross margin targets toward the mid-50s. They have strategically positioned their product portfolio at the exact nexus of where semiconductor architecture is heading over the next decade: taller memory stacks, more complex gate-all-around logic structures, and larger, denser advanced packaging.
So let's make this actionable for the portfolio. What is your specific advice for someone who is currently holding LRCX stock? Do you take profits here or do you let it ride?
For current holders, this is a very strong hold. Beyond the operational brilliance we've discussed, the capital return program is incredibly robust, providing a massive floor for the stock. They returned 45% of their free cash flow in the quarter directly to shareholders. That consisted of $246 million in open market share buybacks and $325 million in dividends. Year to date, they've returned 81% of free cash flow, and management reiterated their commitment to a long-term plan of returning at least 75% to 85% of free cash flow.
And they still have a massive buyback authorization waiting in the wings, right?
Yes, they still have $4 billion authorized for future share repurchases. The floor provided by that dividend and buyback program is rock solid. It protects you on the downside, while the operational leverage of transitioning to panel-level packaging continues to compound your upside.
And what about prospective buyers? Let's talk to the people listening who are looking for a smart way to play the AI boom, but feel like the chip makers themselves, like NVIDIA or AMD, might be a bit frothy or overvalued at current multiples. Is Lam a safer entry point?
For prospective buyers, you do have to acknowledge reality. The stock might currently be pricing in a lot of near-term success. The market isn't blind. Everyone knows they just guided for an $8.1 billion quarter.
Right, that's public knowledge.
However, you need to look past 2026. The sheer multi-year visibility of this market is entirely unique in the history of semiconductors. During the Q&A, an analyst from Bernstein, Stacy Rasgon, tried to get management to explicitly quantify their 2027 growth expectations. Doug Bettinger wouldn't give a specific financial number, but he pointed out a vital macroeconomic fact. There are roughly 8 to 10 massive multi-billion-dollar new semiconductor fabs currently under construction globally that are scheduled to come online between now and the end of 2027.
And every single one of those empty, multi-billion-dollar concrete shells is going to need to be filled with equipment before they can produce a single chip.
Exactly. We talked earlier about the clean room space constraint that is currently bottlenecking the industry's ability to buy tools. That bottleneck is actively being resolved as we speak over the next 12 to 18 months as these 8 to 10 new fabs finish construction.
Opening the floodgates.
As those new physical buildings open their doors, the purchase orders for Lam's etching and deposition equipment will flood in to fill that floor space. That level of multi-year demand visibility makes Lam Research a cornerstone play for anyone looking to invest in the literal picks and shovels of the AI infrastructure build-out.
I love the picks and shovels analogy, because if you buy Lam, you aren't trying to guess which specific software company's AI model wins the generative AI race.
Right.
You aren't even betting on which chip designer wins. You are simply betting that whoever ultimately wins will absolutely need massive amounts of physical memory and bleeding-edge advanced packaging to run their models. And Lam sells the tools to all of them.
Precisely. You are investing in the inescapable physical reality of the technology.
That is a phenomenal, incredibly deep breakdown of a truly complex business. Thank you for walking us through the physics, the financials, and the strategy. And to you, the listener, thank you for joining us on this, admittedly much longer than 5 minutes, but entirely necessary, high-impact, talk tickers, deep dive into Lam Research.
Before we sign off, I want to leave you and the listener with one final provocative thought to chew on.
Ooh, all right, let's hear it.
We started this deep dive by talking about the contrast between the perceived reality of AI and the physical reality of AI, the ethereal, weightless software versus the heavy physical machinery required to run it.
Right. We talked about Lam being the company that builds the cranes required to construct the 500-story AI skyscrapers.
Exactly. And as we look at the future trajectory of this industry, as AI chips become so incomprehensibly complex that they require 500-plus layer NAND memory architectures, intricate gate-all-around logic transistors, and massive glass panel level packaging that defies traditional fluid dynamics, the companies capable of building the machines to make these chips are becoming exceedingly rare.
Yeah, it's a tiny club.
Lam's technological moat, driven by things like direct drive plasma and radical-rich etching, is deepening every single quarter, which raises a massive question for the next decade of technology investing.
Which is?
Are we rapidly approaching a tipping point where the equipment manufacturers, the crane builders like Lam Research and ASML, actually hold more long-term structural leverage, more pricing power, and ultimately more value than the famous chip makers themselves?
Wow. Now that is a thought worth holding on to. If the companies designing the chips are entirely at the mercy of the companies building the plasma drills, the real power in the AI revolution might just be wearing a hard hat in the clean room. We'll leave it there for today. Keep learning, keep questioning, and we'll see you on the next deep dive.